Tony, always good to have you. So tell me what you think is going on in China, where it's a more competitive market perhaps than we have certainly here in the U.S., maybe even in Europe. And you're seeing what? That they're starting to export out of China, meaning they don't have a great growth trajectory there?
Yeah, so the question that we received most frequently following earnings was Tesla's overall revenues grew 10% from the first to the second quarter. China revenues were down by about the same amount. And unlike the U.S., where Tesla has been raising prices, Tesla introduced a dramatically lower priced Model Y in China, about $11,000 lower in July. And they also cut price on their Model 3. So, the question is, why does this seeming dichotomy exist between what's happening in the U.S. and what's happening in China? And that's really what we were trying to address today in our note. And the punchline, I think, as you suggested, is ultimately that the Chinese market is dramatically more competitive. There are over 100 domestic EVs being offered in China today. There are only about 9 U.S. domestic EVs being offered in the U.S. today. And so Tesla last year had 60% EV market share in the U.S. It only had about 16% market share in China. And so we have a level of competition for EVs in China that is much more advanced than what we have in the U.S.
Shepard Smith here. Thanks for watching CNBC on YouTube.